Square climbed to an intraday high Thursday after reporting better than expected first quarter results. The company, run by Twitter's Jack Dorsey, wooed larger merchants and impressed with newer software products. Still, some analysts are skeptical about long-term growth. The company processed $13.6 billion in payments last quarter, up 33% year over year. Earlier, I caught up with Square CFO Friar and asked if that rapid growth rate can keep up.
I think there's a lot of growth drivers in front of us right now. So I'd never want to undersell the core. So what we do in terms of small businesses, micro merchants coming onto the payment system for the first time, still a ton of opportunity there, right? 20 million small businesses in the US don't accept electronic payments. And now with countries like the UK, we see that same thing coming through. Then we're starting to move up market. So the product, as it becomes more feature full, is resonating with larger businesses. International, so I mentioned the UK, but now we're in 5 countries in total. And then finally, the other products that we've built around our ecosystem are starting to really gain a lot of momentum. Capital, CAVIAR, Square Cash, and so forth.
Let's talk about the international expansion. What have you learned from your launch in the UK in the midst of Brexit?
Yeah, so we love the UK market. So 5.5 million small businesses, incredible revenue that they generate, right? Really the lifeblood of that economy. What we see there is similar to the US. Half of them don't accept credit cards, so we know they're missing a sale. So I think in terms of what Square brings, it's the same story, the same value proposition here in the US. But what's different for us on the UK launch is we launched with a really full set of products. So not just payments and point of sale, but a product like invoices, our whole API Build with Square platform. So you can be both offline and online. That's very different for us to come to a market so fully featured from the get-go. And I think what we're learning there is that now we're seeing businesses of all sizes coming to Square right from the beginning.
What are the biggest risk factors with international expansion?
I think ultimately it's about making sure we can maintain our culture and the brand that we've built so strongly here in the US, because as soon as you're at a distance, you need to make sure that that culture is staying quite strong. I think secondarily, every market is different. So while you want a strong kind of maintaining of the culture and the value prop and so on, you also have to allow international markets to be a little different. I just was in Australia this quarter. The Australian market, probably leans a little bit more into being a little quirky, a little bit more funny, a little bit more actually competitive in how they brand, something that we probably wouldn't do here in the US, but we're more comfortable doing in Australia. And so we have to allow our country managers the leeway to do what they see right to really grow their markets.
So how far up market does Square want to go? I mean, we know you experimented a bit with Starbucks. That's now off the table.
Yeah.
But, where do you go from here? Would you ever get back to something like that?
Yeah, I don't think we view it as there being a point where we can't go any further. I think the key, though, is making sure that we do it much more in a methodical move up market. We tend to find bigger customers, just like the small guys, come to us, which is great. So the brand resonates. We're not doing outbound reach. But the key is making sure that we're not customizing software for bigger companies. I think this is where the API platform really comes into its own. So if you are a bigger merchant and you want to do something innovative and new with your checkout, North Face is a good example. Maybe you want to do a pop-up at a ski resort. Square can work really well for you, but we need to be able to allow North Face to build back into their ERP system or into their CRM system, because they're not going to rip and replace that all at once with Square. We're not quite there yet for something at that scale.
So how do you see the payments landscape evolving between Square and Apple Pay and PayPal? What does it look like in 2 years, let's say?
Sure. So I think there are really big market trends going on that are helping all of us. So even since I joined Square, the shift to electronic payments, the shift to using cards instead of cash and check, right? That has been ongoing now for decades. But even in the last 5 years, the US has made a really big shift there. So think back, you would see signs saying we're cash only. Like today, that's becoming less and less viable because your buyers are walking in and they don't have cash on them. So that's a rising tide. I think the shift to mobile, I'm wanting to do more and more with your device, that sort of electronic payment. It's amazing to me in the US how low the penetration is of contactless payments, right? Being in Australia, 70% of all payments happen with a tap. And the US is just slow to that, but it will happen. It's an inevitability. And so when I look at that whole environment that's opening up, I think that's really good for all of us who are in the technology space, helping the seller be able to accept anything, and then helping the buyer have a really unique and different experience.
You mentioned CAVIAR. We reported that Square once tried to sell CAVIAR, but now it seems to be, very much on the table in terms of, something that you're building out.
Yep.
What is the future of CAVIAR? Will we see more of this?
Yeah. So again, and it's a good link back to something like Analyst Day, it's reminding the strategy of why. So when we looked at the vertical of food, Square is very strong, starting in food trucks, going into quick service restaurants. But when we get into full service restaurants, our software is still evolving to really serve that category. So we said, what else can we do that this group needs? And delivery was one of the things that they needed to never miss a sale. And so we bought CAVIAR at the time with a view that ultimately we want to have a whole ecosystem for restaurants, but we're going to jump ahead a little. So CAVIAR today, we're kind of almost backfilling, so it does delivery. We moved into pickup again this quarter, and slowly the point of sale and the payments piece is becoming fully featured enough that a restaurant can also use it. So it does come back to a strategy of being a technology platform for food delivery and pickup, not just why are you in the food business? That seems strange.
Will we see more acquisitions along those lines, or more acquisitions to build out that particular area?
We always want to keep flexibility across the board when we think about corp dev. So one thing we did in the quarter was we raised a convertible debt instrument, so $440 million on the balance sheet. I got asked a lot about why. Nothing imminent, but my job is to make sure Square always has the flexibility we're going to need to keep growing a really big, impactful business. We also could be hyper opportunistic, right? The debt market hadn't seen a lot of action, frankly, and Square was viewed as a really first-class issuer, so great terms. With that balance sheet, we can clearly keep looking at the M&A landscape, and if there was something out there that made sense, where we thought there was good value, where we thought we could show a return, we won't be shy about that either.